Well, it finally happened. Something we haven't seen in more than a decade, with the exception of 2 days in 2018. And what is that? It's mortgage rates going over 5%. So some context, at this same time last year, a 30-year mortgage was at 3.38%. As of yesterday, it's now over 5%. So let's take a second on this week's video market update to go over some of the factors that drive mortgage rates. So mortgage rates are affected by a few different factors. One is the Federal Reserve, and these are not in order, but the Federal Reserve, the bond market, the secured overnight finance rate, or the SOFR, or the 10-year Treasury. Now, while the Federal Reserve does not set mortgage interest rates, when short-term rates increase, or when the Fed increases the prime rate, mortgage rates will tend to follow. The bond market, also known as the mortgage-backed securities market, when rates increase or decrease, and when we see an uptick or a downtick in the mortgage-backed securities market, that will directly affect 30-year mortgage rates. Another is the secured overnight finance rate, which used to be the LIBOR. This is how international banks loan to each other short term. And so as that rate goes up, interest rates can follow. And then lastly is the 10-year Treasury note. And you can see here the increase of the 10-year Treasury in just the last 10 years, and just in the last year. So as the 10-year goes up, mortgage rates will go up with it. But what's one we maybe don't think about? That's inflation. Inflation is one of the last factors we think of that will drive interest rates. And why? Because as inflation increases, right, interest rates will increase to keep up with the value of the dollar. If inflation decreases, mortgage rates will drop. If inflation increases, mortgage rates will go up. So the stat that came out today was that between this time and last year, there is a 41% decline in mortgage applications. Half of that are due to refinances, because people may look and say, well, I won't refinance my loan because I currently have a lower mortgage rate than is currently offered. Now, is this going to slow the housing market? I'll let our real estate experts who are watching maybe chime in the comments, but as long as there is low supply and high demand, even if mortgage rates are high, there's a lot of people that want to buy very few homes. We should still continue to see home prices tick up, or at least be stabilized where they are. But we'll let the real estate experts comment in the comment section if they have anything to add. So just a quick update on where we're at with the 30-year mortgage and the 5% milestone that it crossed this week. If you have any questions on this, let me know. If not, I hope you make it a great week.